So every morning if I want to trade, I will just have to look at the pairs that I will focus on that day. So my pairs that the ones I mean can be possible setup to trade. If I look at this one, you can see the market is trending downwards. Let us look at it at H4. So yeah, truly market is falling down, it's heading down. So in a downward trend, a friend is your friend, so we can look for possible sells. All right, so what you can normally do is to look at reversal patterns. Let's say market is actually trending up here. All right, it's trending up in that way, but we know this is just a downward trend. So we'll look at the reversal patterns that we are going to look at, which will show a possible continuation. All right, so this is a continuation of pattern, a flag. All right, so looking at it, what we do, we just measure the distance in between the channel average from the opening here. All right, so you can measure it like that, right? Then you transfer that distance from the point of a breakout. So it means you are taking profit 1 will be where the price will manage to touch the arrow like that. All right, take a profit 2, you measure the distance sometimes from the beginning of the first leg. All right, to the end of your support trend line, you will transfer this distance to here. So it's likely the price to come there. This is second TP. Second TP, always the price backfires, so it normally backfires. And why is TP2? That's where the market is making our reversal. All right, it's making our reversal. So the reversal that has been formed here is actually a double bottom that is being formed, meaning that price is likely to reverse it from here and going upwards. All right, so since we imagine we entered elsewhere there, we sold, and the market is touching this blue zone, this is where our exit will be. But then you are looking at previously, it is forming like some sort of a double bottom. All right, this is supposed to be your entry, right? Then your stop loss is somewhere below there. If you are risking, let's say $16, possibly you should make at least double that as your profit. All right, so GP1 there, GP2 there, just looking at the areas of conference where you had a massive consolidation. All right, so actually this price is going up there. By just looking at it, this one is going up there. So this high, that's where the buy side liquidity is. So market is likely to go there. So if you buy there, your take profit will be $21 per small lot, and you are risking only $20. You are risking only $20. This is not bad, this is good. So risking 20 and aiming 120 after maybe so many days of waiting, of which is makazo kuti voters minutes, but that is that. So the idea is when you want to venture into a trade, look at the direction. This is a downward trend, so as a downward trend, you look at the possible continuation pattern, and we have managed to identify this one. All right, so this is a bullish flag goes bearish, a bullish flag goes bearish. It shows a possible continuation or for a trend. So ukama trader is how do you identify the interest? To identify the interest is very simple. Let me just read this one. Okay, so remember it's in a downward trend, all right? Then is while the price is somewhere there, I'm gonna see 90 and 20 order. Once we're able to identify the pattern which is there, like this one, all right, make sure good trend line is touching preferably the weeks minimum of 3. All right, so we can do it in this way, but since this is going to be like a wedge or a flag, we can just target the high highs. All right, touching some sort of weeks are even better currencies. So the moment you identify a flag like this one, you look to your left. All right, you look to your left, you look to your left where there is area of massive consolidation. When the price was forming your leg, you see good somewhere here, that's where our consolidation is. Or Gabena, there is area of drop base drop. Okay, drop base drop, drop base drop. Drop goes like this, then it forms a base, then it continues a drop like that. So in this case, market was dropping, it made a base there, it continued to what? To drop. So this area of consolidation, we call it our base. All right, so you look at the where there is base. So in this case, this is where the base is. All right, so you stretch that one to the right. This is area of a base. It can be area of a supply, so to say, also. All right, you stretch that one to the left. Now when the price has entered in this region of your base, okay, while having touched the support, a resistant trend line, which is this one, this line, okay, this is the resistant trend line. Now when the price touches the zone while meeting the resistant trend line, it means actually here, that's where your entry is going to be. All right, when you enter there, what you target is this low. Okay, now before even you can target that, the first take profit that you can do, I said you measure the distance in between the channel like this one. All right, you transfer that distance to here, you're going to have your take profit one. Or you can just target this one, this low I'm talking about. Surely price is likely to come that far, and when the price has managed to do this, it mostly reverses, and the reverse again, it can go up there, it goes like up there without even coming back. All right, but before it makes that sharp move to the up, it makes a reversal pattern. All right, it makes a reversal pattern where it has reversed like here. Now what we are seeing here is a double bottom being formed. It means that currently we are supposed to enter buy. Okay, we should take advantage of this trade. We need to take advantage of this trade. Let's say buy there, but a good buy could be here or maybe there. All right, imagine Chabono, we have just jumped in because we have seen good, market will be heading way up, stop loss down there below there. All right, so we are risking 10 For example, that is, we're risking 10, and this is enough to risk for a day. Alright, our take profit not less than 50. So the TP1 is going to be 30. Ababeka could know the double bottom has completed the neckline. As it goes, it will bounce back to retest the neckline and target this high. It's going to be somewhere 60. At least you can exit here for good. While it is going, I know the price is going to target this one because it's going to form a very huge W. So this is going to be its neckline, and actually the neckline will be broken targeting this leg. All right, so it means price is going somewhere up there, up there, but where you can enter and exit comfortably. First one is here, which is $30, and the second one is here. All right, then this is bobo. If you still want to hold, you can actually hold up to here, but the price will not go straight. It's going to make a series of a pattern that will show a possible break to the upside or possible continuation of a beginning uptrend. Then you ride with that one. Command when you enter there at CTP1 here, then wait those series of events when the market will give you another opportunity to make a buy. All right, this is how we combine the strategy. But remember, this is in a downtrend, and we saw our possible continuation, a bullish flag. Market goes bearish like that, it will break the downwards. So our entry, remember I said, is here. Reason, you look to the left when there is a base, a drop, base drop. All right, that then disable bomb. All right, that's it. If you want to take profit, you measure the distance in between, then you bring it to the area of breakout and retest. There you get it. Or actually, you can just target this low here. All right, this low here, this low here. You just hold. All right. If you miss this entry, you can end after breakout and retest. After breakout and retest, but the moment you see such a flag, you target your entry there. From here, anywhere you can enter, but as much as price yago yagonda the resistant trend line, you enter there while targeting this low. All right, but you see, good, within the process, market had it to drop in good profit somewhere there, then it went back again in a small floating loss, and it went back with a very good profit. So before it breaks out, you can exit here. All right, or you just continue after successful breakout. As the market is about to retest, you can exit and enter again after a retest. But you can see, there are a lot of activities going on here. Okay, a day or 2 or 3 days, while the market is still negotiating whether should you continue with this or what. Yeah, but then flags, they never disappoint. You see, market was able to push downwards there. That's how we do it. So I'm going to have another video explaining similar pattern. Sure.